No claims bonuses, or as I like to think about them, use your product penalty. We pool risk. If something goes wrong, there's enough money in that pool to go and pay for all those houses to be rebuilt.
Like, we want to settle claims, that's what we're here for.
I'd love you to talk to us about, well, how insurance works, 101.
So the way it fundamentally works is we come together basically as a whole country, and we say, all right, we'll all pay a little bit of premium every year to offset that risk, so that anything that goes wrong, that's the pool that goes and pays for those losses to be remediated and reinstated.
A lot of people talk about risk-based pricing.
Risk-based pricing is saying we've all got houses. Some people in Wellington live in very high earthquake-prone areas, or there's some stuff on the shore that's very high risk of being flooded. And so we'll get them to pay a little bit more to represent that risk. And so that's kind of how those two models change.
What are your thoughts on things like a no claims bonus?
You have this product, right? You've bought this guarantee to say if something happens, we're there to fix it. And we're going to penalize you by making you pay more for your premium if you go ahead and do that. If you make us fulfill our promise, you have to pay more for it. That doesn't feel right to me. That's what I have a strong opinion about. On our house and contents cover, right, we don't do that. We don't have that, call it a no claims bonus or call it a loading for claims or whatever you want to call it. From my perspective, I think it just works a little bit against what we're trying to achieve.
It's not like a badge of honor not to have a claim. That's what the product is there for, right?
If you think, oh great, I don't have any claims, I don't want to have any claims, I'm going to go ahead and just set my excess really high. And that gives you a significant reduction in your premium.